Hello everyone, welcome to EduTap and welcome to the Phenomics series. So in today's session, we are going to discuss a very important concept that is regarding the Monetary Policy Committee. So you must have heard that recently the Monetary Policy Committee meeting was held in September 2022 and there was important decision regarding the repo rate that was taken. And when the repo rate changes, the Marshall Standing Facility and the Standing Deposit Facility, they are also changing. The Monetary Policy Committee is the one that can also take the decisions regarding the cash reserve ratio and the statutory liquidity ratio. So much power is in the hands of the Monetary Policy Committee. The Monetary Policy Committee is the one that is taking the decisions regarding the monetary policy. So why so much power is given to the Monetary Policy Committee? What is the motive behind it? As well as how the Monetary Policy Committee was formed. So all of this we are going to discuss in today's session, but before starting with the session, there is a big announcement from EduTap that we have brought for you the complete guidebook for the RBI Grade B and SEBI Grade A. So you can get all the information regarding the common queries that you have. If you want to know about the pattern of the examination, if you want to know about the cutoff of the examination, if you want to know about the eligibility criteria of the examination, all the information about the exam you can get through a single guidebook. Even if you want to know about the sources of the exam, about the preparation, that how you should prepare, the sources you should prepare, as well as the strategy that you have to follow, all of that is provided through a single guidebook. So through these guidebooks that are free of cost, that is provided by EduTap free of cost, and the link is given in the description box below, so you can download these books and all your queries will be answered through these guidebooks through definitive answers. Okay, and you do not have to visit different links, you do not have to visit different websites to find your answers. All your answers will be provided through these guidebooks. Okay, so your time, your effort must be saved so you can focus on the preparation. Okay, so now starting with the session, starting with the RBI Act, because the Monetary Policy Committee, the monetary policy comes under the RBI. So this Monetary Policy Committee was formed under the RBI Act. So in May 2016, what happened that the RBI Act 1934, this was amended so that it provides a statutory, it provides a lawful basis for the implementation of the flexible inflation targeting framework. So see, there can be the flexible inflation targeting framework or there can be the strict inflation targeting framework. In the strict inflation targeting framework, what happens that the government with the RBI or with the central bank decides a percentage. Let's say the central bank has decided, with the discussion with the central bank, the central government has decided that 3% is the inflation rate that we want. Okay, we do not want above it, we do not want below it. So strict means 3% is the focus and the RBI has to maintain the inflation around 3%. It cannot go 4%, it cannot go 5%, it cannot go 2%, it cannot go 1%. So you can understand that it will be so troublesome for the RBI also, or the bank that is managing it, or the organization that is managing it, to maintain the inflation around 3%. And you must know that the inflation, the rise in prices, when the prices are rising, the producers, they get more profit. They are incentivized to produce, and when they produce, the output is increased. To produce this output, the employment has to be increased. So actually, the growth comes with inflation. So when the prices are rising, the growth is happening, the employment is increasing, the output is increasing. And if there is strict inflation targeting, then what happens that the organization has to control the inflation, and if it is controlling it in a very fast, in a very hasty manner, then what happens that the growth can also be stopped. Okay, if the inflation goes up to 4%, then the producers are incentivized to produce more and more, to produce, the output is increased, the employment is increased, but the RBI cannot let this go on. The RBI will curtail this inflation, reduce this inflation to 3%. So the producers will somehow lose the incentive to produce. So the strict inflation targeting binds the hand of the organization that is managing the inflation, and it provides only a single focus to control inflation. So under the strict inflation targeting, what happens, there is only one motive: to control the inflation at all the cost. Okay, so the RBI Act was amended in May 2016 to provide for the lawful basis of the flexible inflation targeting framework in flexible inflation targeting framework, let's say the RBI has to maintain the inflation around 4%. So there is the leverage that is given to RBI that the lower tolerance level will be 2% and the upper tolerance level will be 6%. So even if the inflation is going above 4%, still the RBI will see that, okay, is it benefiting the country? This kind of inflation is benefiting the country. Yes, this is benefiting the growth of the country. So the RBI will let this inflation go to 4.5%, 5%, 5.5%. So it is in the hands of RBI to see that this kind of inflation is harmful or beneficial. So not only the inflation can be controlled by RBI, but the growth is also the objective that is seen by the RBI. So here in the flexible inflation targeting, the leverage is given in the hands of the RBI to see that this kind of inflation is good or not. But of course the upper tolerance level is given so that the inflation do not go above 6%. Okay. So the Reserve Bank of India Act 1934 was amended in September 2016 also. So in May 2016, the flexible inflation targeting framework was added, and in September 2016 by the Finance Act 2016 to provide for a statutory, to provide for a lawful basis, to provide for the framework for the Monetary Policy Committee. So here in September 2016, the RBI Act was amended so that the monetary policy framework can be added in the RBI Act of 1934 for maintaining price stability. Now the work of MPC is what? The work of Monetary Policy Committee is what? To look after the flexible inflation targeting framework. Okay, so in the flexible inflation targeting framework, what is happening? Maintenance of price stability is happening. Price is maintained. Okay, the inflation is maintained while keeping in mind the objective of growth. So not only inflation but the growth is also the objective. So inflation, of course, we have to maintain the inflation first, but the objective with the objective of growth. So this was the flexible inflation targeting framework where the leverage has been given as well as the objective of growth is also seen with the inflation. So this is the motive of Monetary Policy Committee to maintain the price stability keeping in mind the objective of growth. So there are the dual effects of this. So now target. Now this inflation target under the section 45ZA, the central government. So central government is the one that consults with the RBI and determines the target in terms of the retail inflation. That is the consumer price index inflation, or we can say this is the retail inflation once in 5 years. So the target is determined once in 5 years. Okay. Right now what is the target? Right now 4% is the target in connoissance with plus minus 2%. That is the lower tolerance level is 2% and the upper tolerance level is 6%. Okay. So in August 2016, the central government notified in the official gazette that 4% CPI inflation, the 4% consumer price index inflation or the retail inflation as the target. So 4% is the target for the period from August 2016 to March 2021 with an upper tolerance limit of 6% and lower tolerance limit of 2%. I hope you have understood this very clearly. But in March 2021, what happened? So it is only for 5 years. So from 2016, it was till 2021, this decision of this target. But in 2021, the central government said that we will retain this target of 4% for the coming 5 months also. Okay. So the central government retained the inflation target and the tolerance band that is of plus minus 2%. For the next 5-year period also, that is from April 1, 2021 to March 31, 2026. Now the question can be from this because this is very important. Okay, that is for the next 5 years also this band is going to remain in the country. I hope you have understood about the inflation target, and this is the flexible inflation targeting framework. That is, this is the flexible inflation targeting. The RBI has the leverage, the Monetary Policy Committee has the leverage to see that where the economy is growing. During the COVID, it was pushed that the output should be increased, the growth should be increased. Then the inflation was going above 4%, but it was let it be. Okay, let the inflation go above 4% so that the producers can be incentivized to produce more, to employ more people. But after when it went above 6%, now the RBI is taking strong measures to control it. Okay. So this is the leverage that is given to the RBI to maintain the inflation in this band, tolerance band, not a single percentage but a range is given to the RBI. So now failure. What if RBI fails to maintain the inflation in this band? As you have seen that the inflation is going above 6%, from in 2022. From the start of the 2022, since January 2022, the inflation is above 6%. So what if the RBI fails or the Monetary Policy Committee fails? So failure to maintain the inflation target, the average inflation is more than, if it is above the upper tolerance level, that is if the inflation is above 6% or if it is below 2%, then the RBI's these steps will be taken. Okay. Where the bank fails to meet the inflation target, it shall set out a report to the central government. So the report has to be sent to the central government. The reasons why the failure is there. So why the failure is there? Because the Ukraine-Russia war is going on, the COVID was there, to achieve the inflation target. So why the inflation target is not being met? Remedial actions. What the actions the RBI is taking, the Monetary Policy Committee is taking. An estimate of the time period within which the inflation target shall be achieved, within which the inflation will come back to the in between 2 to 6%, that is around 4%. That the target has to be set, that when the inflation will come back to this percentage. So the remedial actions has to be told and the estimate time period also has to be told. Okay. So now coming to the Monetary Policy Committee that looks after the monetary policy of the country. So under the section 45ZB of the amended RBI Act provides for the constitution of the 6-member Monetary Policy Committee to determine the policy rate. So here what happens that the Monetary Policy Committee is of 6 members. There are 6 members in the Monetary Policy Committee, and that determines, the Monetary Policy Committee determines the policy rate, that is the repo rate. And when the repo rate changes, the margin standing facility and the standing deposit facility also changes. I have already made a session on the liquidity adjustment facility. I will put the link in the description box below. You can see that section where the range has been told, okay, of the repo rate, the MSF and the standing deposit facility, how they are related to achieve the inflation target. Now the inflation target has to be met with the objective of the growth, with keeping in objective the growth. The MPC determines the policy repo rate required to achieve the inflation target, and the MPC is required to meet at least 4 times in a year. Okay. Each member of the Monetary Policy Committee has 1 vote, and there are 6 members. So if there are 3 to 3, that 3 are saying that in favor, 3 are in favor and 3 are against. So the governor of the RBI is the one, that is a member. So the governor of RBI, that is Shaktikanta Das recently. So he is the governor of RBI. So governor of the RBI is one of the member of the MPC. So the governor of RBI has a second or casting vote. So when 3 against 3 is there, so the governor will have the additional vote to cast in favor or against. Okay. Each member of the Monetary Policy Committee writes a statement specifying the reasons for voting in favor of or against the proposed resolution, that why they are in favor and why they are in against. So they have to write the reasons also. Okay. So here under the section 45ZB there are 6 members. So I have brought for you, this is the recent notification that was out in October 14, 2022, in which the members you can see. So there are 6 members. This is the first member, and this is the second member, and this is the third member. So these 3 members, the 3 members are chosen by the government, and they have the period of 4 years, or the government can change it. Okay, so whichever is first. So we can say that they have the period of 4 years. So 3 members are chosen under this 6-member committee. 3 members are chosen by the government, by the central government. The other 3 members, that is Dr. Rajiv Ranjan, that is the executive director in the Reserve Bank, and the Michael Debatra Patra, who is the deputy governor in charge of the monetary policy, and Shri Shaktikanta Das, who is the governor. So 3 members are chosen by the government, while the 3 members are from the RBI only, from the Reserve Bank of India only, and from these 3 members, one is the governor. Okay, I hope you have understood the constitution of the 6-member committee, that 3 members are chosen by government, the 3 members are from the RBI only, and from these 3 members that are from RBI, 1 member is the governor, that also has the casting vote in when there are 3 to 3. Okay. So I hope you have understood this very clearly, the 6-member committee. Now coming to the monetary policy process. What is the whole process? We always say that the monetary policy committee meeting is happening. So what is the process? So in the starting of the process, the monetary policy committee has to tell the schedule. The schedule of monetary policy voting or decision meetings for the entire fiscal years has to be announced in advance. Okay. So this is the whole the whole schedule that has been provided by the Monetary Policy Committee, that in April, June, August, September, December, February. So this is for the fiscal year of 2022 to 23, that is fiscal year of 23. So this schedule has been provided, and at least 4 times the meeting should held, means at least 4 times. Above that it can be 6. So it is bi-monthly meeting that is held by the Monetary Policy Committee. So I hope you have understood that the Monetary Policy Committee meetings, they are held bi-monthly, and due to some reason, maybe if the meeting is cancelled, it doesn't happen. So still, if the meeting is cancelled, at least 4 times they have to meet. At least 4 times they have to, the Monetary Policy Committee meeting must happen. Okay. Meeting notice, ordinarily not less than 15 days notice is given to the members for meeting of the committee, and in case of emergency there can be a meeting, but 24-hour notice has to be given. Okay. The policy resolution is publicly released. So you all must have seen the resolution, that as soon as the meeting ends now, after that the resolution is sent out. So policy resolution, that is the Monetary Policy Committee meeting, after that the policy resolution is sent out, in which the conclusion of the Monetary Policy Committee meeting is there, that what are the decisions that has been taken by the Monetary Policy Committee, that the Monetary Policy Committee has changed the reserve, the repo rate, with which the MSF has changed, with which the SDF has changed, how much the repo rate has been changed. So all of these decisions has to be sent out in the resolution. The Reserve Bank's Monetary Policy Department assists the Monetary Policy Committee in formulating the monetary policy. Okay, so it can take help of the department. So now here you can see this was the Monetary Policy Statement 2022-23. This is the resolution of the Monetary Policy Committee. So the meeting finished on September 30th, and the resolution was sent as soon as the meeting was finished, in which important decisions were given, that the policy repo rate has been changed, it has been increased by this much, and this much it has become. So all the decisions are provided in the MPC resolution, which comes after the meeting just ends. Okay. So minutes of MPC meeting after the resolution in under 14 days. On the 14th day, after every meeting of the Monetary Policy Committee, the minutes of the proceeding of the MPC are published, which include this much. Okay, it includes the resolution adopted at the meeting, the vote of each member, why the member has given the vote, the statement of each member of the Monetary Policy Committee telling that okay, this vote has been given due to this reason. So this is included in the minutes. So I hope you have understood that first the schedule comes, then the meeting happens, then the conclusion is written in the resolution. It is provided to the people as soon as the meeting ends, so that us also know that what is happening. So the resolution, after the meeting, the conclusion is given in the resolution. After the resolution, on the 14th day, the minutes of the meeting, comes, in which the members tell that we have given this decision due to this. Okay, the reason of the decision is also provided by each member. Okay, so these are the things that you need to understand. I hope you have understood about the minutes of the MPC meeting. Now coming to the Monetary Policy report. So the Monetary Policy report is once in every 6 months. So why I have brought this also, because usually the students are confused regarding the Monetary Policy Committee statement, that is the resolution, the Monetary Policy Committee resolution that is released after the meeting, after the bi-monthly meeting that is held by the Monetary Policy Committee, and the Monetary Policy report. So you can understand that the Monetary Policy Committee statement or Monetary Policy Committee resolution, this is released by the MPC, Monetary Policy Committee, after every meeting. So the meeting happens bi-monthly. So this resolution is released bi-monthly. But the Monetary Policy report, this is released once in every 6 months. So you can understand this is the difference between these two. And the Monetary Policy report includes the explanation of inflation dynamics, why inflation is happening in the past 6 months, what was the inflation and what was the target that was there. The projection of inflation and growth and the balance of risk, that inflation going forward, what will be the inflation, going forward what is the growth, how the risk will be managed. Assessment of the state of the economy. State of the economy means the assessment of the economy has been done, the imports, the exports, the balance of payments means how it is being managed. Covering the real economy, the financial market stability, financial situation, the external sector which may entail a bearing on monetary policy. decisions. So all of this is described in the monetary policy report. Updated review of the operating procedure of monetary policy, that the outlook will be this of the monetary policy, and the assessment of the projection performance, that what is the projection of the country, that the country will go this much and how it is performing. Okay, so this is the monetary policy report. I hope you have understood about the resolution, you have understood about the report. This is also very important. Do not get confused, because I got mail regarding this, that the student was confused in this also, that what is the difference between the resolution and monetary policy report. So they both are quite different. It is released after the meeting and this is released once in 6 months. Okay, so now I hope you have understood about the Monetary Policy Committee thoroughly. You know that when it was formed, how it came into being after amending the RBI Act of 1934 in 2016. So do subscribe to our YouTube channel and join our Telegram channel for the PDF of this session. And thank you very much. If you have any query, you can write us here or you can mail us through this number. Thank you. You can mail us through this or you can contact us through this number. Thank you very much.